Is DeepSeek about to cause a stock market crash? With the stock market dominated by US tech companies focused on AI, has DeepSeek become a competitor to OpenAI? And is it about to bring things crashing down for everyone, including retirees? The big US tech firms hold all the aces when it comes to cash and computing power. First, we need to answer the question, what is DeepSeek? DeepSeek is a Chinese AI startup with the launch of its latest AI models, which it says are on a par or better than industry-leading models in the United States at a fraction of the cost, is threatening to upset the technology world order. The company has attracted attention in global AI circles after writing in a paper last month that the training of DeepSeek v3 required less than $6 million worth of computing power from Nvidia H800 chips. Why is DeepSeek causing a stir? The release of OpenAI's ChatGPT in late 2022 caused a scramble among Chinese tech firms who rushed to create their own chatbots powered by artificial intelligence. But after the release of the first Chinese ChatGPT equivalent, made by search engine giant Baidu, there was widespread disappointment in China at the gap in AI capabilities between US and Chinese firms. DeepSeek's threat to American firms riding the AI boom operates at multiple levels. The first layer of the business model challenged by the Chinese company includes the firms working on AI models themselves. Goldman Sachs estimates that in 2024, there was around $68 billion of investment in the sector in the United States. But DeepSeek seems to have undercut the entire market on price by a factor of around 20. Early estimates show that DeepSeek input and output tokens, that is, the smallest unit of text processed, are around 96% cheaper than alternatives. Related to this is the low cost of developing the new Chinese AI model. DeepSeek R1 cost only around $5.6 million to develop. In comparison, OpenAI's O1 model costs $600 million to develop. This is not just a minor difference in development cost. The fact that DeepSeek's development costs less than 1% of that of its American competitors calls into question the entire sector in the United States. Is the entire edifice based on overinvestment? That is, too much money sloshing around causing businesses to become bloated and lazy? Then, there is the impact on the market for graphics processing unit, GPU, chips. Early estimates suggest that DeepSeek uses only around 9% of its rivals' GPU capacities. This means that as researchers and commercial players adopt the new Chinese model, they will need far less physical GPU infrastructure. But companies such as Nvidia have seen their stock market valuations skyrocket precisely due to Wall Street analysts factoring in massive future demand for GPU chips. This explains why the Nasdaq index is now at risk of collapsing. Before the release of DeepSeek, Nvidia alone made up around 14% of the entire index. The irony of the DeepSeek saga is that the developers of the model were pushed to make it so efficient because the United States is trying to restrict access to American-designed chips from the likes of Nvidia. Since necessity is the mother of all invention, this has pushed Chinese developers to economize on chip usage. If DeepSeek does indeed crash the entire American AI industry, and possibly even the stock market, it will be because bureaucrats in DC tried to control the technology sector in ill-advised ways. Why the crash is likely temporary. Let's address the elephant in the room, the market crash. Yes, tech valuations are cratering. Bitcoin is back under $100,000. Yes, venture capital is suddenly stingier than a raccoon guarding its trash. And yes, everyone's asking, is this 2000 all over again? Here's why the answer is a resounding no. The dot-com crash was a bubble built on vaporware and unfulfilled promises. Today's tech sector is different. AI isn't just hype, it's a revolution, and revolutions don't stop because of a bear market. Look at the underlying fundamentals. the explosion of generative AI, breakthroughs in machine learning, and, yes, companies like DeepSeek challenging the incumbents. These aren't just trends, they're tectonic shifts. More importantly, crashes are often resets. They flush out the weak, the companies that overspend and underdeliver, and pave the way for the strong. The AI space, for all its noise, is still in its infancy. If you're panicking, take a breath. The phoenix rises from the ashes, and this crash will be no different. The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing, Trump said. Instead of spending billions and billions, you'll spend less, and you'll come up with, hopefully, the same solution under the Trump administration. We're going to unleash our tech companies, and we're going to dominate the future like never before. Some experts said DeepSeek could shift AI investments to smaller companies. Short term, that is bad news for Nvidia because it will temper the demand for its chips, wrote analysts at research firm Forrester. However, longer term, the lower cost and thus energy will open up model creation opportunities for many more startups and enterprises.